Hello everyone, I'm Stan and let's get started with our streaming session. So yeah, Tuesday streaming session from Exness. I'm Stan, a trader, a senior trading specialist from Exness. So during this live market session, I will share with you some insights, some interesting ideas, maybe opportunities which might unfold in the market. So we will go through the news, through economic calendar together. We'll try to understand narratives, and of course we'll go through charts, and I will answer your questions that you might potentially have. All right, so let me quickly remind you that we have a chat here. So here on YouTube, live streaming session, we have a touch chat, so you are welcome to ask any questions that you might potentially have. And I will, from time to time, switch to chat answering your questions. So I'm glad to see you all guys here who have joined the streaming session today. So please let us know where you're from, which country, which city. Yeah, so gold again. So yeah, let me read chat a little bit. Bright Fury, right? Fury. I don't know if I spell your name right, so sorry if that's not. Hi Stan, please analyze gold. Sure we will. Don't worry, gold it is. So we will like gold. We all love to trade gold, so of course we will pay a lot of attention to gold today. So yeah, Nairobi, Kenya, Joyce. Hello Joyce, yeah, nice to see you here. Have you been on that streaming session, the previous one, or is it your first time? Yeah, thank you for coming. Oluwa, watching from New Delhi, India. Yes, very cool. New Delhi, India is with us. Yes. All right, guys. So without further ado, let's get straight to charts and try to understand what's going on in the markets today. All right. So just one quick sec. One quick thing. I will set up my software a little bit because I don't think. Oh, all right. So I think you should see now the Exness terminal. All right, that's fine. All right. So as you remember, we are always starting with understanding some narratives and some context behind the price action. We are not diving straight into charts immediately because, well, we can do that. So I have, pretty much a lot of screen time, so I can totally analyze charts without any fundamentals, but I guys give you some important clues. So if usually technical analysis itself, it's cool, but it's cool as a tool. So it has also some limitations and obstacles. What do I mean by that? So for example, if you take a look at this chart, let's say gold, for example, right? What do you see here? Well, don't treat it as an analysis yet. All right, that's gold. For example, if I give this chart, let's put 4-hour chart. If I give this chart to 2 traders or 5 traders, some traders will find continuation patterns here. They say, all right, we gotta go to the upside. That's a triangle. We gotta buy. One trader will say. Another trader will say, all right, so that's a head and shoulders. We gotta sell. All right. That's the notion of technical analysis, because 2 opinions can totally coexist together and none of them will be wrong. That depends on the perspective. So that's why when you click the button buy or sell, well, it's better that you know what you're doing. So it's better that you are prepared. It's better that you are more confident in your trade. So how to get this confidence? Do you get this confidence from the screen time alone, spending 10,000 hours near the monitor, near the screen? I don't think so. This confidence comes from understanding the market logic, understanding the logic where the price will go and why it is going there, because price and markets don't exist just for speculation, especially currency market, especially gold. They exist for large financial institutions, guys. So there is a big market out there, and they trade not because they want just to get a couple of pips of profit, and they're not trading for speculation. Well, some of them do, but not all of them. And usually they trade because of some necessity for trading. For example, commercial banks, they exchange currencies in order to facilitate businesses going on or facilitate some investment operations. Other investment funds or hedge funds, they purchase gold for other purposes. Just they drive the price higher or lower. These are big financial institutions. So that's why we're starting with understanding some kind of narratives. So what's going on in the markets? What important news are there? What drives the capital today? All right, so let's start with basic benchmarks. By benchmarks, I mean the American dollar index. That's our main benchmark, so we want to see what's going on with that. So currently this week, it's not moving in any direction, so it's rather moving sideways. And I would say that the free fall of the American dollar had stopped a little bit since the previous week, so it's starting to rather consolidate. Why is this happening? So this is happening because of the easing in the marketplace, a little bit of easing in the marketplace. Risk appetite is slowly getting back in. How do I see that? For example, if you take a look at S&P 500 index, you will see what I'm talking about. So it's retracing. Volumes are not very huge, but it's not moving down. It's actually holding pretty well around 5,500 something. So it's not moving down. So the market crash is not happening yet. And also, if you take a look at VIX, which is volatility index of S&P 500, it's moving down to 24, all the way from the peak of 60 to 24. So that's the level of fear. In other words, VIX is the price of the options for S&P 500 index. Options is an insurance. Think about that as an insurance. For example, if you want to get insurance against the drop, you got to pay some price, and the price was huge 3 weeks ago, in the beginning of April, almost 4 weeks ago. Now the price is substantially lower, so it's twice lower. Option price is low. That means that the insurance cost is getting down, the level of fear is getting down. So with that, we kind of say that this is some easing going on in the market. Why is this happening? This is happening because of Donald Trump, the president of the United States, negotiating with China about tariffs, and they want to come to some conclusion, and probably they will come to some conclusion. So markets are coming down a little bit, and Donald Trump is pulling back from his policy, which imposes a lot of uncertainty on the markets. So that's pulling back. Another point, why am I thinking that risk appetite is back a little bit? So just take a look at Bitcoin, for example. Bitcoin is holding well above 94,000, so it's acting as a risk-on asset. So as an investment asset, as a speculative asset, so it's holding pretty well. It's not moving down, so it's not going under sell-off anytime soon, so it's holding pretty well. That is not a guarantee that it will stay at this level, but currently, especially this week, markets are holding pretty well. So that's what I'm talking about when I'm saying the risk appetite is on. All right, so let's monitor some major market conditions in the capital markets. First of all, let's start with CME's FedWatch tool. FedWatch tool is a tool which is published publicly, so that's absolutely free. You can access on the cmegroup.com website, so it indicates the probabilities of interest rates going in some direction. What is that? For example, going to historical tab, let's say May 2025, which is the current year. So you see this orange line. Orange line is not moving anywhere. For example, there is no changes starting from April 17, so there is just a sideways action, meaning that Fed funds futures for federal funds, for interest rates, they're steady. They are not moving in any direction. So in other words, capital is not flowing in, flowing out of this market. So trading is about change, and change may come from different sources. Some of them are technical, for example, when there is a technical trading, but most of them are fundamental, when there is substantial change in expectations of monetary policy. All right, for May, that's pretty much stacked. What about June? For June, so expectations about interest rates are such as we see here. 60% of traders are thinking about the one quarter point drop, one step decline. All right, 36% of traders are thinking about interest rates staying at the current level. But what is notable, so you see this scenario, the blue line, Now it's 35%. 2 weeks ago it was 21%. So expectations have become a little bit more hawkish, believe it or not. So this is yet a threshold, right? So that means that basically there is nothing. So there's no. Of course, the one-step decline is the dominating scenario, but 425, 450, which is the current level, is still priced at a 37% level. It's not too low, right? When these two bars, or if these two bars will start going equal, how can that be? For example, imagine that this probability rises and reaches 50%. All of a sudden, we don't know. For example, it might happen. If it will happen, if it will reach 50%, so that means equilibrium. That will mean that the American dollar will probably make a big or huge pullback from the current level where it is now. So it will be our huge opportunity to sell Euro USD maybe, or maybe buy a USD JPY, or maybe sell GBP USD, I don't know, whatever it might be. But you see that we have slight tendency of this line going up a little bit. So it was 25%, it was at this level, now it's here. Just take a look at historical tab, right? It was here, 21%, 24%, sorry, at the middle of April. Now it is 35%. 35%. So we have slight tendency of this market going up, right? It's not the market, it's probability going up. It's not a signal yet, but it's an indication that something is going on with tightening expectations about the interest rates. Maybe inflation will go up, I don't know. Maybe inflation already goes up, but the Fed fund futures are discounting this scenario. All right, so that's one thing. That's one thing that we see. What else do we see? All right, so let's go to economic calendar and see what important news are going to be published here. So I'm using for that purpose tradingeconomics.com/calendar. That's absolutely free to use website. You can use Exness website. We also have economic calendar here. So if you prefer to use Exness, you can use Exness. All right. For example, let's put USD here. That's American dollar. And if we scroll it down, there is a lot of news, a lot of important news to be published this week. For example, tomorrow, it's the PCE index. The PCE index, that's Personal Consumption Expenditure Index, which is known also as a Fed's inflation. Fed's inflation. What is that? Basically, that's an inflation benchmark or indicator which Fed, or Federal Reserve of the United States, the Central Bank of the United States, relies on to make their decisions. And well, we don't have numbers here, so let's go here. I wanted to see some numbers, some projections. Wednesday, all right, so scrolling it down, and here it is. Give me just here it is, core PCE index. The previous one was 0.4%, right? So it was pretty high. Now the consensus is 0.1. Okay, the consensus is 0.1. So scrolling it here, we have a forecast here. The forecast is that the PCE index is peaking, actually. The inflation is peaking. Market expects the inflation is peaking, and the expected, well, it's not June actually. Why that they put in June here? It's not June, so it was March, it was April actually, but I think it's a mistake. Or whatever it is. All right, so inflation is expected to go down a bit. So recession fears, recession expectations are priced in a little bit. So American dollar is oversold right now, and we see this number. So imagine what happens if PCE number goes up. For example, it's not 0.1 like it is here, but it's, for example, it would be 0.3. Imagine what will happen with that. Of course, American dollar might get a boost. Don't forget that American dollar is oversold right now, so it's laying in the oversold territory. So that's why that would be the first important indication. Wednesday, tomorrow, and big money probably will stay out of the game until they see this number, because they really need to see some advancing in inflation here. All right, guys, I will also read some chat. Dhaka, Bangladesh. Hello, Dhaka. I've been there, and yeah, I love your city. Nigeria. I haven't been in Nigeria yet. Maybe I will be there in the future. All right. Let's go on. Let's go on, guys. All right. PCE index, as I've said, is expected to be published on Wednesday. Thursday. Thursday, scrolling it down, ISM manufacturing PMI index. So this index basically is called the production index. That's a sentiment index. Basically, that's a survey when the Institute of Supply Management basically asks purchasing managers, what do you think about the market? What do you think about the business? So is business going well? And yada, yada, yada. So they are basically interviewing people. And they build an indicator based on that. So that's not a real data, I think. That's a sentiment indicator. That's a poll. But it's pretty reliable, and it has some connection to S&P 500 index. What is notable here that it was under 50 for a long time. So once it was above 50, it was in January. Then 2 months it was above 50. January, February. Now it's moving down. For April, for example, it also might be below 50. Everything below 50 is considered as potential threat to the economy, and it has some correlation with S&P 500 index moving down. Just take a look at what was going on here. ISM PMI index was located below 50 for the long time, ahead of January, and all of a sudden, guess what? Guess what happened with S&P 500 index? S&P 500 index started to fall in February, which was the decline. So that's exactly how it's happening with ISM index. ISM index is moving down below 50 for several months, and then 2, 3, 5 months later, S&P 500 index usually moves down. So that's a delayed correlation. So currently we don't see any. So it was above 50 for 2 months. There was a positive sign. Maybe that will support the market. I mean, the economy is doing pretty well. But we will look through publication, we will see what will happen here. That's not a super important index, I mean, for trading right now. So if you trade, I don't know, gold or any other currency pair, I don't think it will be very much of importance. PCE is much more important. So basically there's a direct relationship with this publication and the performance of the US dollar. For example, should it jump higher? Should it be 0.3, 0.4 instead of 0.1? American dollar probably will react immediately with a sharp growth. Why is that? Because first of all, it is oversold. Secondly, recession fears are priced in, low inflation is priced in, and probabilities of interest rate not moving down is actually going up. So believe it or not, it's actually going up. It's not moving down, it's going up. That's why, guys, it's important to see what's going on the real fundamental data. And Friday, of course, it's non-farm payrolls, all right? Non-farm payrolls, the consensus forecast is 135K, positive numbers still. Well, let's see what will going on here. So labor market has been particularly strong for the entire year of 2024. No surprises was visible here. Were visible here for this indicator. And the unemployment rate is expected to stay at 4.2% level. All right. 3 major publications this week. Let's record that. PCE index on Wednesday, ISM index, purchasing managers index from Thursday, and non-farm payrolls. All right, now let's go to charts. So we are done with our analysis of our preparation analysis. Let's go to charts. So the sentiment for this week is a little bit of an easing sentiment. So the level of fear decreases. What happens when the level of fear decreases? First of all, that might give some support for the US dollar. That's number one thing. Secondly, that might give some support for Euro yen and pound yen, because yen is expected as a safe haven, and if market conditions stabilize, money flows out of the yen due to carry trade operations. So basically, good market conditions, improving market sentiment, usually leads to pullbacks for Euro yen, pound yen, Canadian dollar versus yen, whatever it is against yen, okay? And maybe dollar yen, maybe American dollar versus yen. All right, so that's why instead of gold, let's try to understand it in the first place. I think that might be really interesting. USD JPY is standing right at the bottom of the strong intermediate term level and the long-term level here. So that's a static level of support. To understand the picture a little bit more clearly, so in addition to this level, I would also build, here it is, by the way, so give me just a sec, okay. I will also build the 200-day moving average, sorry. The long-term reference. Okay, so the downtrend is confirmed. So the price is located consistently below the 200-day moving average. And if we build here a couple of more benchmarks, for example, I don't know, 20-day moving average and 50-day moving average, we will understand that basically, so let me use another color. Basically, yeah, we are in a confirmed downtrend, but as we see now, market sentiment is improving a little bit, so that might represent opportunity. That might represent opportunity to actually try to buy this USD JPY. All right, so it's still in a downtrend. It's still in a downtrend. But what we see, the current action. So the previous low was tested. The previous low was tested, right? Now the market had bounced off the previous low, and it moves in a 1, 2, 3, 4, 5, 6 day of correction. Usually that's the sign of a trend stopping a little bit or rotating, at least rotating. I don't say about the big pullback, but at least it's rotating. All right, we have some question here. How does NFP affect the market, particularly on gold? Well, basically, right now there is no big relationship with NFP on gold. But usually if NFP is stronger than expected, that supports the American dollar and that pushes gold down. But I don't think that's the matter of today's market, because gold is kind of independent today. So that acts as a completely independent investment vehicle. So it doesn't have any relationship with the US dollar. US dollar was going down, gold was going up. Now it might stand still, gold might still continue going up. But we will switch to gold, don't worry about that, and we will speak about this relationship a little bit later. All right, so about USD JPY. So currently, yes, the market structure is still pretty strong to the downside, but if we will go, I don't know, to the downside, so probably we should maybe stick to the higher levels, not this level. I don't know how deep it will go in this correction, but that might represent opportunity, as US dollar is slightly supported right now. It might represent opportunities. So if you take a look at what's going on here, I don't think it will be too long term, but as a short-term idea, as a short-term reference, absolutely we can think about that. We can think about buying something against the yen this week. All right, so let's maybe put here Bollinger Bands indicator, because I want to visualize the borders of the range, and I want to take off the moving averages here. All right, let's take it off here. MA, let me delete it or hide. Okay, let me hide it. All right, so currently, for example, so it's in a pullback, but if I want to enter the position, so what I would need to do in this case, so I would need maybe to wait until it pulls back the lower area of this Bollinger Bands. Maybe it will go here at this, what I call the protective area. How do I measure the height of this area? So let's put this simple indicator called average to range, ATR. That's volatility indicator, very simple to use. And you see it goes in cycles. It goes higher, it goes lower. It goes in cycles. And now it's in a declining cycle, but the peak of this indicator is 60 pips. So in other words, my height of this area should be 60 pips below the bottom of the Bollinger. For example, 142.15 minus, it's not 15, it's 18 actually. Let's take 20, okay. Minus 60 is gonna take 141.60, right? 141.60, something like that. So I guess if we wait for USD JPY to dive into the zone, and potentially we will start searching for any trading opportunities here at the bottom of this zone. So potentially that might represent the pivot of the day. And if we are right, if our hypothesis is right, we can capture some pullback here as US dollar is slightly supported, and as yen might be under pressure this week due to improving market sentiment. Because when the sentiment is improving, the speculative sentiment, the yen usually gets under pressure. But I think maybe even the more interesting situation might be building around pound yen. So pound yen was already on the move for some time, and currently I don't very much like the daily structure here because, yeah, from a daily structure perspective, that's okay, that's moving up for some time, but it's standing right at the bottom, or at the top, sorry, of the Bollinger Bands in comparison to USD JPY, which on the daily chart is not yet close. So it's not, it's just at the middle, it's near the 20-day moving average. It's too far from the upper border of this Bollinger Bands or from the trading range. Pound yen basically balances at the peak, but at the same time pound yen is a momentum based instrument. So in other words, when it takes off, when it's on the go, so it can easily break the Bollinger. Maybe it will not go substantially higher, but maybe something like that is expected. So it's on the move, it's already the momentum based instrument. British pound is pretty strong. So I would maybe just try to, instead of going USD JPY, I might go with pound yen. So how exactly would I do that? Well, that's also the same dynamics as described with USD JPY. So we want to see the formation, we want to see the false breakout of the formation, we want to see the price going closer to the potential pivot zone, and that's exactly where we build the position. So that should work like that. Psychologically, guys, it's not comfortable at all because most people want to do what? They want to go with the momentum. So they want to buy when the market is going at the peak, when they want to sell when the market is going at the bottom. Intuitively, that might be the good solution. Because yes, why not? So your brain tells you to buy when it's actually rising, when it's going at the peak. But according to the market structure, it's not the best point of entry. The best point of entry usually happens when the market tries to take this, to capture the liquidity from below, to make a sell-off, reverse, and that's it. So something like that. So the best course of action, the best entry opportunity is located at points like this. Psychologically, that's absolutely uncomfortable because you are working against the market, against the price action, but statistically, that's the best way that you can do. And well, for pound yen, I will be monitoring for potential reversal here, maybe below the Bollinger and at the protective area, at the support, at the potential intraday support. If it pulls back, you may, by the way, confirm your entries with 5-minute chart with candlestick formations. Just like, I don't know, for example, let's take a look at this April's setup. When the market dives deeper to the pivot zone, how could you fine-tune your entry? You can go to 5-minute chart, and instead of just buying, blindly at the bottom, so you can wait for some engulfing pattern, for example. All right, engulfing pattern is the simple pattern when the candlestick just closes above the previous candlestick, the big one with a big body. Closes above the previous one, or at least close to the peak of the previous one. So that's an engulfing pattern. So that might be your entry point. Well, market not immediately moves, right? But still, that's pretty good opportunity. And the same thing is here, another engulfing pattern, right? You may also use for fine-tuning your entry. You may say, all right, I will wait patiently until it goes to the pivot zone. I will wait for the 5-minute pattern, and then I will go to the long side. So that will give you a little bit more confidence if you see such patterns, if you use such patterns. So if you don't want to just blindly buy at any zone, you're free to. So you can go to smaller time frame to adjust your entry. Well, that's basically a good practice. All right, what is alternative scenario? Alternative scenario is that pound yen is standing right at the peak, so it had tested the upper zone of the Bollinger Bands, and now it's already it was Sunday, that's not counting, right? That's a small bar, it's not counting. 2 days below the peak. 2 days below the peak, so maybe, I don't know, today or tomorrow might be correctional day. That's also the possibility. But if you wanna, how do we understand that that we might actually face the correction? Well, that will be very simple. So if it goes down, and if it does not jump immediately to the upside, if it stands, it continues standing, or if it just fails quickly. here, if it fails quickly here, that will be an indication that the market might be pretty weak actually, and it might need to retest lower levels. But until then, the market is kind of pretty uncertain. We don't know that yet, and the trend logic would be the best logic that we can imply here. All right, so we had a strong trend. The trend is going on. We are in a strong uptrend. Of course, following the trend might be the best way to go. The trend might reverse, but usually if you stick to the trend, you will have more hit rate or win rate in your positions than going against the trend. Most people intuitively want to sell because they want to go against the trend. But usually they get not very good hit rate. Only 30% of their positions work as they expect. All right, so now we are going to gold. Ta-da, going to gold, right? So that's exactly what we've expected so long. We're going to gold, and let's dive deep into this market and try to analyze what's gonna happen. First of all, again, it's oversold from a technical standpoint a little bit, overbought, sorry, from a technical standpoint. So it had tested the band of the Bollinger, upper band of the Bollinger, correcting for already 5 days. 1, 2, that's not a day, that's Sunday. 1, 2, 3, 4, 5, that's a 5th day. So the uptrend is now slowing down. The momentum is slowing down, obviously, because when we have more than 4 consecutive closes below the peak, that means the momentum is slowing down. That does not mean that it will reverse, not at all. But it might stay in this range for a little bit longer. That's why in the beginning of this session I was showing you some picture. I was expecting some rather consolidation with a further breakout of this consolidation. So I would expect something like that. Maybe some triangle will be building here for a little bit longer, maybe 5 days longer, maybe 1 or 2 weeks longer, I don't know. Something like that might be possible. But if it doesn't go down, if it stands in its consolidation for pretty long time, so the moment of potential breakout will become closer. How to understand that we are building this range but not reversing to the downside? Well, there is no clear understanding of that, but there are some clues. For example, let's take volatility again. Volatility indicator. As you see, average true range indicator is at the peak, exactly at the peak. Usually when it's peaking, that's not the best time to enter the market. That usually means that the market turns sideways, it turns into consolidation. Just take a look at the previous dynamics, like it was happening, like it was behaving in the past. Exactly. 19th of April 2024, the same situation, well, not 19th exactly, 12th of April. Market had reached the new peak for gold, then the correction started, or consolidation started, and it was long consolidation until it's bottomed, until it's reached the bottom. It has reached the bottom. Now as it has reached the bottom, so the market was ready to move. It was here, well, not immediately, of course, with a small intermediate term consolidation, but it was ready to move. Another bottom again, another uptrend. All right, another bottom again, another uptrend. Now we have a peak here. We have a peak, and ATR is peaking. So that's a cyclical pattern. So whenever the volatility is high, when it's peaking, so basically markets becoming more cautious in this case. So insurance or options are becoming more expensive. So it's a little bit more difficult to accumulate a position, to construct a position with derivatives. So that's why demand is beginning to shrink in this particular case. So the market is expected to consolidate a little bit, especially if we have 5 days of consolidation already. It's expected to slow down a little bit. So I know that you want to trade gold. Gold, it seems, as a huge investment opportunity, and it was actually in the first quarter of 2025. But now it's already the second quarter. It's end of April. First month of the second quarter is already over. It's almost over. And we need to actually pay some attention to that. All right, another thing that I wanted to show you, so give me just 1 second. I will show you seasonal pattern for gold. Just I will open my SeasonX account. That's the application that enables to actually view seasonal tendencies or seasonal patterns. All right, seasonality. Just give me very briefly. All right, so here it is. That's a seasonx.com website. That's an independent service which allows you to watch seasonal tendencies. What we want to see here, we want to see gold, because gold has clear seasonal tendencies in the past. So April, the end of April 20th is considered as a seasonal window of opportunity which actually stops. So basically in the beginning of May, at the end of April, at the beginning of June, gold tends to do what? Gold tends to stop. So the rally for gold tends to stop. By the way, guys, that's exactly what we've been viewing. All right, so that's a 10-year seasonal. For 10 years in a row, we might say not 10 years, 15 years, 25 years, if you will. For 25 years, the same picture, almost the same picture. The peak in April, end of April, beginning of May, the market starts to consolidate, market starts to stop. So that's why, well, this is a pattern that repeats itself over and over and over again through all 25 years. So that's a statistical pattern, pretty reliable. That's why I would probably say that it's pretty reliable pattern. So the next big shift will happen in the end of July, beginning of August. So that's the next seasonal shift. Probably the next big trend for gold might actually be boosted during this time period. Why this matters, by the way, lots of commodity traders treat this chart seriously, treats the statistics seriously. They want to sell at the peak, they want to sell in May and go away. That's exactly what they're doing. So that's why, that's another argument for gold probably staying put inside of this area. Another one, so let's take a look at barchart.com and go to commitment of traders. Commitment of traders report. Sorry, some ads is popping in. That's trying to advertise us something. Some mobile services, I don't know, whatever it is. But we don't care. So what we want to see is gold, actually, the performance of the gold market. All right. So commitment of traders, this position, we are interested in this position particularly. So the red position is commitment of traders, commercials. It's a commercial traders. They buying a lot of gold right now. Still, they're buying. That's a demand factor, and they're buying even at 3,300 for tri ounce. They buying it, and the purchasing is continuing. Purchasing is continuing. So that's a good question, because they're buying, but this group is selling. So in other words, while this group is selling, the speculators are selling. They're sponsoring this rally, right? At some point in time, this group will probably incur losses, and the market might need to drop because when these guys are buying, so at some point in time, there will be no supply at this particular point, and or they will continue selling aggressively. So you see these two lines are going down together. Green line is going down, red line is going up. Usually that's associated with a lowering price, with a declining price. So I would say that rising price is not logical in this situation. So has to do with declining price, or at least consolidating price. Because commercial traders, they're usually market makers. They don't attack the market. Their positions are not aggressive. They are not market takers. They are makers. And they prefer to basically construct the position slowly, just supporting the market slowly. And this group is aggressive. The green group is aggressive, so these are large speculators. What they do is they attack the market. They sell sell to the bid aggressively, selling, pushing the market, trying to push this group. We see that they are not successful yet. At some moment in time, they might actually break this floor and make the market at least correct for a little bit. All right, so that's exactly what we see for gold. I think that it's done for gold, right? And I think it's good. So what I don't expect the big decline. I expect a consolidation. I expect the consolidation, some triangle, flag, pennant, whatever it might be. So we don't care. So we cannot anticipate the form of a chart pattern or the shape of the chart pattern, and it doesn't really matter. What matters is when consolidation is over, market may continue, maybe breaking this consolidation. But until then, it might be wobbling, it might be shaking a little bit, it might be rotating around certain prices, maybe going down a little bit. So what I see in the price section inside of the day, if you're a day trader, I see some unstable order flow. What do I mean by that? So it's pretty unstable, it's pretty shaky. It's pretty noisy. It's meaning that there is no clear direction right now. So just take a look at the 5-minute chart. You will see what I'm talking about. That's pretty noisy price action. It's noisy all the time, by the way, but particularly I don't see any stable order flow right now. It's yet not moving, right? So it's going up down with pullbacks, with potential substantial pullbacks. Rather consolidations than any directional move here. So order flow is pretty wrapped up here. Maybe after publication of PCE index or non-farm payrolls, the situation will change. Maybe this market will activate a little bit, but currently I think it's consolidating. So this rising cycle is over, as seasonal cycle is over, and commodity traders are trying to sit on the sidelines to wait until the further information, until new information comes in. All right, so we had a question from Joyce. How does NFP affect the market, particularly on gold? All right, that's a very good question. So to understand that, let's build a daily chart for gold. And usually rising gold is associated with a decline in dollar, with a decline in American dollar, because gold is an alternative investment vehicle. So in other words, it's purchased when investors are afraid of instability. S&P 500 is not growing, Nasdaq is not growing, so what else is left? Gold, of course. They're buying gold as a protection, and the first quarter of 2025 was notable due to geopolitical tensions, due to tariff wars, a lot of uncertainty. When uncertainty is playing in the market, gold is in demand as a safe haven. Gold, Japanese yen, and it was euro, and particularly this time. But gold is a long-term or the traditional investment vehicle, which serves as a protection, That's for now. Currently, in the normal market conditions, gold just competes with US dollar, with treasury bonds. For example, yields of bonds are going up, gold is moving down. Yields of bonds are moving down, gold is going up. That's in a normal market, in a traditional market. Now market is not yet very normal. However, it comes to normal maybe back, because VIX is 25 right now. It's not 60 like it was 3 weeks ago. It's coming back to normal maybe. So let's see where it will lead. Usually it competes with treasury bonds. Okay, so what I'm talking about, it's if we Google 30-year treasury yields and go to CNBC, for example, cnbc.com, you will see that these yields are going up and down, right? So for example, today and throughout a couple of days, yields are moving down 4.7%, meaning that the bond prices are going up a little bit. So usually that might support gold a little bit, but not that much, because usually the big swings, the big shifts in yields might support gold, because gold might get back in play. And usually so the rule of thumb is when this line is moving up, gold is usually going up, and vice versa. But it was breaking throughout the first quarter of 2025. It was not working like that. However, you see the situation. Yields was moving down, gold was what? Gold was moving up as an investment vehicle. So basically nothing else was growing again other than gold. So that's why it was kind of FOMO type of asset. Everybody wanted to buy that. All right, another question. How gold moves in different trading sessions? Well, just like any other asset, it moves in 2 sessions. The one is European session, particularly European trading session, London opening, which starts at 7 p.m. London time approximately, London to Frankfurt. Well, it was I guess here, so that's the beginning of the London opening. And another one is New York opening. So in my time zone, it's 2:50 or 2:30 p.m. around this time. So that's New York opening. In other words, as market starts to trade closer to this time zone, to this time period, so volatility may shrink a little bit, diminish a little bit, then it might pop up again. Just take a look at let's put 5-minute chart, and let's put ATR indicator here again. So that's my favorite indicator, as I already noted. You see that market goes in cycles. I mean, volatility goes in cycles. It goes from low. London opening is here. You see the volatility is pretty high. Then afternoon for European time zone, and that's American time, America opening. So New York opening, and then volatility goes down again. And this cycle repeats itself many times. Again, for example, this is American opening. This is London opening, okay? Again, this is Asian opening, Asian session. Also there is Asian session, but volatility usually does not pop up very massively. Again, American opening, volatility is at the peak. London opening, volatility is fairly high, but not that high like on American opening. So that's the cycle basically. So if you want to trade some momentum, quick trades with continuations will follow through, so you gotta stick to these time periods. London opening or American opening. If you are a scalper, if you don't want big moves, if you want to take a couple of pips out of this market, going back and forth with the market, with the price, so obviously you should stick to low volatility zones. For example, like that. Imagine you are a scalper, so low volatility, and you just capturing in and out, you're capturing something out of this market. The market is sideways. You can even put Bollinger Bands indicator here. And for example, you may take a couple of quick scalps here. Selling here, for example, buying it back here. Selling here, buying it back here. Two scalps or two intraday trades. Volatility was low, but then volatility starts to what? To expand as the market approaches the American session. You're not supposed to sell against the move, because breakouts are more aggressive, they're more furious. So again, volatility diminishes, so you can get back to your scalping technique if you want. If you prefer to do that, for example, buying here, selling back here, selling, buying back here, something like that, I don't know. So low volatility zones basically are good for short-term trading styles, for scalping, for day trading with small targets. High volatility zones are good for momentum trades, when you just get into the trade and you want your trade to go quickly. You want an impulse phase to develop. So that's what you want to do here. All right, another question we have from Joyce. Does gold have a correlation with silver? It has, to a certain extent, not just you can actually even trade this correlation. But to understand that, let's go to TradingView. I'll show you a couple of tips. All right, so this is gold and this is silver, okay? So we put here XAUUSD slash XAGUSD. Let's take any, I don't know, a lot of brokers, we don't care. We can take any quote provider from choice, whatever it might be. This is a spread between gold and silver. You see that correlation means, the total correlation means that it's not moving anywhere. These are periods between December 2024 and April 2025. This is a period of total correlation. Well, at least complete correlation. Then it breaks, meaning that gold outperforms silver, and the correlation breaks. Now the correlation gets back again. All right. And there are periods of much correlation. So correlation means that the spread is not moving anywhere. It's just, is building inside of the range, not moving anywhere, with some minor fluctuations, but still it is sideways. When it's on the move, correlation breaks. So be careful about that. Especially that happens when the gold skyrockets, when it goes in a strong rally, I don't know, something like that. So it's very, very difficult to trade correlation. In the normal market, yeah, you can do that. But this is a strategy basically. So you go here, you build a spread, you put XAU-USD in the first place, then, XAG-USD in the second place, you build a spread, you wait for the moment until the market pops up and breaks above the Bollinger. So with this situation, you gotta do what? You gotta sell gold and buy silver. When the market approaches this area, you gotta sell gold, buy silver, and back again, when the market reaches this zone, you gotta buy gold and sell silver. Vice versa, right? So that's a spread trading. That's called a spread trading. You can manually build a construct position. So, and if correlation works, you can, I don't say easily, but you can capture some moves out of this trading range. This is not a trading instrument, guys. It's not quoted in terms of CFD. You got to construct it yourself. Or conversely, you might use it as a reminder. For example, if market is here, if the spread is here, you got to potentially buy gold because gold will stop to rise here. All right, and the silver might go sideways, something like that. That works with any market, by the way. You can build any spread of your choice. US oil versus UK oil, for example. WTI oil versus Brent. A lot of spreads. You can even build currency spreads or anything you like. All right, but we have cross pairs anyway. Okay, thank you for explanation. Much love from Kenya. Well, we also send our love to Kenya. Thank you. Thank you. All right, so I think we've spoken enough about gold already. So let's switch to maybe any other market. What is interesting this week? As I've said, sentiment is improving a little bit. Maybe I think we should stick to some instruments which are correlating with S&P 500 index, which are Euro Yen, Pound Yen, and the USD JPY. So speaking of Euro Yen is pretty stable, it's pretty strong. Why is that? Because Euro is also pretty strong. It was actually pushing it lower, so this market cannot break. You see that it tried a couple of times to come to the border of this range, and it's not breaking. So that's why I will be very cautious with the Euro Yen, but Pound might look even stronger. So yeah. So currently Euro is, as I've said, Euro is a little bit weakening right now. So Euro Yen is not advancing. So, but we might combine this instrument with something stronger, like USD JPY or maybe Pound Yen. Nasdaq. All right, let's go to Nasdaq. US Tech. Well, usually Nasdaq is a little bit more aggressive when it comes to pullback because it was oversold. So let me show you one thing. Let's put a spread between two sectors. One would be technological sector, XLK ETF, which performing just as the same manner as Nasdaq. And let's put here, for example, I don't know, whatever it is, financial sector. You will see exactly where technology sector is. Technology sector is underperforming substantially. All right, so it's just standing at the bottom. That's obvious. A lot of stocks have been hit heavily. Tesla, AMD, Nvidia, they have been hit heavily. And the good question is whether we will have a pullback on those tech stocks or not. So I think that they are oversold pretty much, massively. They have been massively oversold. But the good question is, will the pullback happen actually? Will the coil start to unwind? That's a very good question. It's very difficult to say right now. But if this more optimism will come to the market, if more positive sentiment will come to the market, I think that the pullback for Nasdaq will become more aggressive than for S&P 500 because it was oversold. So in other words, it can easily cover something like that in comparison to S&Ps, which is already on the go, but the reaction of S&Ps might be weaker. But currently we are not there yet. The sentiment is improving a little bit, just a little bit. Okay, VIX is 25, but give it maybe a couple of more days or maybe one more week to see if the market is improving its sentiment. If we will see that the sentiment is improving, you can think about buying Nasdaq. I see that waiting for too long is not a strategy because opportunities don't last long. But so you might understand that if sentiment improves, Nasdaq will be the better choice than S&Ps because it was oversold. So the pullback might be aggressive and furious and substantial. That would be my answer, but how exactly it will pull back, we don't know that yet. It might be Nvidia pullback, it might be Apple. Apple is already pulling back a little bit. Apple was hit heavily due to tariff situation, right? Because there was a lot of uncertainty about situation with China, with production in China, with tariffs, and a lot of components of Apple are manufactured in China. So, all right, let's see about that. Let's see where it goes. So I think it's oversold yet, and Nasdaq might pull back. But the market is, I would say, pretty concerning. So the downside risk is still pretty high. It's still pretty high. Just if you take a look at what's going on with the market in comparison to or relative to 200-day moving average. So 200-day moving average is still here. So I think that the aha moment, the moment of truth would be when the market will approach this level. Will it be able to hold this level or not? Maybe we'll see another downside move here. So because Donald Trump has not gone anywhere. He will come again and say something and will maybe drop the market again. I think that sooner or later market will get used to that, to his statements, to his verbal interventions. But currently that's the way it is. So there are a lot of uncertainties shaking the market. Let's see where it goes. All right, so let's sum it up a little bit, guys. So what are we expecting this week? So gold is consolidating. It's the end of the seasonal cycle. It's already 5 days below the peak. It's the peak of volatility cycle. Also, it's not a very good entry point for longs. So the best course of action might be maybe to anticipate the sideways move and treat it as a sideways market. What's my take on euro? Euro might be peaking as well because we've seen the situation of slightly increasing sentiment for the US dollar. It's not going anywhere again, so it has not advanced last week. It's not going anywhere this week. So currently you see that moving average is coming closer here. It was a good momentum situation. It was good momentum play, but it was at the end of April, and this momentum hasn't played for a very long time. It was just 2 days of an upside breakout. It's standing here. I probably would see it will probably consolidate with sliding down a little bit because the sentiment for euro is weakening as well as market sentiment increases or improves. Why is this happening? Because previously market was driven up, euro was driven up by sell America trade. Let's call it sell America. Sell America trading narrative. Everybody was selling American assets. Chinese investors were selling treasury bonds of America, American stocks, American dollar. Everything was going down because of uncertainty. I think the situation will stabilize. It's not yet a financial crisis, so they will negotiate about something, about tariffs, and sell America narrative will probably step back. So I don't think that's for too long. The situation will for too long. Don't forget that European Central Bank is trying to send dovish signals. So they lowered the interest rate on their last meeting, and they're going to get the interest rate down 3 times again this year. So they are basically not supporting euro. They are fighting with this rising trend. They are diminishing the interest rate. They will do it 3 times again throughout this year. So the fundamental support for the euro is not yet that obvious. Okay, so at least central bank doesn't support euro right now. And I don't think we should also go against the central bank in this situation. All right, guys, thank you very much for listening. So we have maybe some more time for questions. All right, so that's pretty much our preparation for today, which we've undergone through. In my focus are yen pairs on the long side. Gold is sideways. I don't know where exactly I can enter the position right now. What else? What else? Maybe dollar versus yen potentially might be the long position. I don't know exactly, but of course we are waiting for publications from PC index standpoint, ISM and NFP. So let's see how those publications will play out. Of course, you are not supposed to stop trading, right? Because there is a publication in the market, nothing like that. But you need to be aware of them because volatility will increase a little bit, at least a little bit, maybe to the great extent. Yeah, thank you for joining today. So don't forget, this is just an educational session, so that's not an investment advice. We are not giving you any anything direct. We're not pushing you to trade, so that's totally your responsibility for your trades and my responsibility for my trades. That's the notion of trading. Speculators always alone. All right, guys. So come next Tuesday. Thank you very much for coming. I will be waiting for you next Tuesday, the same place, same time. I appreciate you coming. Drop the link to your friends and fellow traders. Give us a like, subscribe to Exness channel.